Well, good morning, everyone. It's Wednesday, it's November 7th, and the market's going to open up in about 2 hours. I wanted to do a morning report because we got some news from overnight markets right now. They're a little higher. They actually closed lower, but they're higher right now because there's talk about China easing tension in regards to trade war. I want to show you guys something. This is probably this. I've been talking about this particular topic I'm about to show you, but it's beginning to make its way into print. Now, I've been talking about this for about 6-7 months now. If you look back in my videos, or if you're in my boot camp, you will notice that I talk about this all the time, but we're finally starting to see it in print. I'm going to read it to you. Trump's chances of re-election likely hinge on the economy. I'm going to read it again. Trump's chances of re-election likely hinge on the economy. All right? Nobody's been saying it till now. Why is this important? Why did I read it twice? I'll repeat it again to you if you guys are not in my boot camp and if you just started watching my videos. China right now is being passive aggressive. They want to resolve this trade war. Their economy is not doing really well either. They're slowing down just like we are. Worse so. They don't have the structure, the infrastructure that U.S. have in terms of exports and imports. But here's the thing. When Trump starts really going aggressively into his re-election campaign, that's when China is going to start making a lot of waves. And it's going to start about 6 months from now. We're about 1 year away from re-elections right now. Yeah, right around a year away. I think in about 5 to 6 months, they're right now laying back, being very passive. Yeah, we'll negotiate. Let's get into phase one. Let's see if it works. But I believe the closer we're going to get to the elections, the more waves China's going to make because they know that Trump's chances of re-election likely hinge on the economy. Trump wants to say, hey, stock market's at all new highs. I want to be real. That's a really strong point, especially for people who aren't political. You got a lot of people who are either Republicans or Democrats or kind of in between, and they're not really focused on the politics. They're focused on the economy. So when politics start impacting or really moving into economics, when economics start really moving into the economy, sorry, it's still early. It's only about 7:30 here, and I'm on the East Coast. So if you're in California right now, it's like 4:30 in the morning. Ouch. So I believe this is going to become a pattern. And again, it hasn't been in the news, which has been surprising. It's just now starting to make its way into the news. But I think this is going to be big. This is going to be big. It's going to be a huge factor in how this trade agreement is going to be arranged. So China wants to see U.S. remove a 15% penalty on $125 billion worth of goods. If they don't, China said, and they said it. It's in this. It's not in this report. It's actually in another report. But they said that if they don't do it, they're not going to move on in formal proceedings. And I don't think U.S. is going to do it. I don't think U.S. is going to show good faith. Trump has been consistent in being very tough negotiator and having the other side show much more good faith before he starts doing that. He wants to appear very tough, and I believe he's not going to do it. We'll see. If he does it, it's going to make a lot of headways. If he doesn't do it, it's going to cause a discord between U.S. and China. So I wanted to point this out to you because today was the first or second time I've seen it in print. Nobody's really talking about it, but that's the pink elephant in the room. I think this China and U.S. negotiations, this trade war, this is going to be the key to the elections. I'm not joking. And again, I'm not just saying this now. I've been saying this for about 6-7 months. But it's funny how we're now starting to see it in print. I saw someone else talking about it where they made a comment where they said that maybe China believes that they would have a better time negotiating with a less tough president or with Democrats. But that and today's comment was the only thing I've seen. And again, I'm making a huge deal out of it because I think this is really important. And I think the re-election is going to hinge on this trade war. So here's my view. I don't think we're going to work anything out in the next several months. And I think we are going to start working things out when we get closer to elections. And the problem with that is it's going to put Trump in a corner because he's going to want to win the election, but at the same time, he's going to want to negotiate so things don't cause the market to cool off a lot. So it's going to put him in a corner, whereas right now he has more advantage. But I get his position. He wants to play tough. He wants the best for this country. Who can blame him? All right. So, hey, it's tough being a president. But again, I wanted to point this out because it's literally the second time I've seen it in print. And if you guys have seen it in print, or if you guys have seen someone talk about this angle, let me know. Send me an email. Send me an email to support at marketgeeks.com or support at or Roger at wealthpress.com, and I'll get it and I'll respond back to you, or I'll post your comment. So we got jobless claims coming out in about an hour, about 58 minutes if you want to be specific. I'm not expecting anything major. I'm expecting the number to be between 205 and 220,000. I'm seeing here 215, 220. If it's around 205 to 220, wouldn't make a big deal out of it. The average has been on par. There hasn't been any noise. And most importantly, the Fed already told us less than 10 days ago that they are lowering rates, and they're going to lower rates again. So I'm not too concerned about the economy. I'm really concerned about the trade war and the stock market's impact to the trade war. Why? Because this is the overnight session. The market is stretched out, and these fundamentals are trying to cause the stock market to reach and reach and reach and reach. The problem with that is it's fooling you guys. It's fooling everyone. Why? Let me show you. If you look at smaller stocks, notice we're already here. We've already below the peak. We've already began coming down. So what happens is the smaller stocks are going to increasingly put pressure on the large caps. Notice the S&P's higher. Let me see if the NASDAQ is higher too, just out of curiosity. Probably is, but let's take a look. Let's take a look. Let's look at the Dow here, probably at highs as well. I'm just curious to see if all the indexes are higher. Yeah, the Dow is too. Let me look at the QQQ. All the large caps are higher, but again, you're talking about 30 stocks, 100 stocks, 500 stocks right here. All right? But here, you're talking about 2,000 stocks with a market cap of only $2 billion or less. Much more vulnerability to China. This is a year, notice. Back and forth, back and forth. We go overbought, oversold, overbought, oversold, back and forth. And again, I wanted to point out something else to you. Volatility on the S&P 500. Point this out here. Sorry, I got the wrong ticker symbol. I've been pointing so many. I've been looking at so many stocks. Why did it say wrong ticker symbol the first time? That's weird. I've been looking at so many different stocks that I'm starting to forget ticker symbols. This is volatility. This is the VIX. This follows the volatility on the S&P 500, and it looks like we're at about a year low right now. Let's see. Let's go to 2-year. Actually, we're real close to a 2-year low. So again, with volatility being complacent, being near all-time lows, it's bound to spike. And with the SPY or the E-mini S&P, whichever you prefer, being in the overbought level, I do not recommend you buy this market. Also, if you look at stocks that are driving this market higher, and there's literally a handful like Amazon, Apple, it's a little higher right now. But if you look at these stocks over a month or so, you will see that they're topping out right around here too. And they're due to come down back to the 50-day moving average. Notice the overbought level. They're just kind of stretching out a little more with a lot less momentum. So I'm not expecting a lot of upside from this. Again, China, secondary economic data. Now, let's talk about some fun stuff. Earnings. Just when you guys thought I was going to let you go, not so fast. You know I love doing this. Monster Beverages is reporting today. Trading below the 200-day, 50-day moving average, coming off slightly neutral level. I would sell the stock near the 200-day moving average if it gaps up. If it trades above the 200-day moving average, I would wait till it's above the 50-day again. Right now, it's below the 200 and the 50. Classic short opportunity. Don't buy this stock. Sell the stock if the conditions are right. Symantec, one of my favorite stocks, one of the oldest stocks. Trading above the 50-day moving average and definitely above the 200-day moving average. This is where you want to buy the previous stock, Monster Beverage. Obviously, it doesn't look anything like this. It looks like the opposite of this. It's not overbought yet, and from what I could see here, it's moving towards away from support into resistance. There's a good chance it may hit 25, 26. I would wait till this stock moves up and builds another base before getting long into it. So I would watch the stock, but I wouldn't be a buyer just yet. Teva, big pharmaceutical company, one of the biggest pharmaceutical companies in the world. Below the 200-day moving average, above the 50-day moving average. In the twilight zone, if it reaches overbought levels and goes to the 200-day moving average, I would be looking to sell this stock right around here. Very simple, very similar to Monster Beverage. Next one, Dish. I'll go through these fairly quickly to give you guys a little break from me. Breaking down prior to earnings, neutral, not overbought or oversold yet. More downside, definitely don't buy this stock. If you want to be safe, I would wait till it breaks below 31, maybe 30, and start buying it around here because there's really no holding here, and it'll break a good 9-month to a year level around here. Let's look at 2-year. Yeah, I would wait for it to break this level right here, the 30-60 before going short. Definitely don't go long this stock. Next one, Disney. Told you I got a lot for you today. Disney's right in the twilight zone, holding the 200-day moving average, which is very positive. I'm not expecting a big win from this stock, but if the numbers are positive and if it begins trading above the 50-day line, there's a really good chance it'll hit 52-week highs. Keep in mind, Disney's a cyclical stock, and we've got holidays ahead. Holidays, busiest time for Disney. Sometimes in the before the summertime and before the winter rally, before the 2 holiday periods, it rallies. So if you see it trading above the 50-day line for 2 days in a row, maybe a good time to buy. And lastly, Cardinal Health stock. We got Teva and Cardinal in the health industry. Trading above the 50-day and the 200-day moving average. We have the cross here. That's when the 50-day and the 200-day cross. Not looking bad at all. I like the stock. It took out short-term resistance level, which was at the 200-day moving average right here, right around 50, 80, 89. I like this stock. What I'd like to see is a congestion, maybe a consolidation, and a slight pullback to the 47, 48 level, and then you going long again. I think it's going to go higher. Let's take a look at long-term. Yeah, again, I would prefer to see on a weekly basis. This is a weekly basis. This is long-term. I'd prefer to see the stock higher, but on a daily basis, on a short-term basis, it's looking good because the 50-day is crossing right now. So if this price action holds up, you will ultimately see, let me go to weekly here. You will ultimately see the blue line, the 50-day line, above the 200-day line, and that's when you strike. All right, folks, sorry I went a little too long today. I had a lot to say. Again, China and Trump. Watch every word carefully. It's driving the market. There's no logic to this market, and sadly, it's only really driving the top 20, 30 stocks, and it's making the appearance that the overall market is healthy. But let me leave you with something important. This is momentum levels for the overall stock market. Let me show you this. If you look at momentum levels, folks, in the stock market, not S&P 500, not the NASDAQ 100, not the Dow 30, in the stock market, stocks trading above $2, only 54% of stocks are trading above the 200-day moving average, while the S&P is rallying to new highs. This is where the stock market really is, not those 500 S&P stocks. And it's really not the 500. It's like literally 10 companies that have huge market cap that are driving it. All right, I think I've said enough. Please, please, please be careful and don't let this market trick you. If you guys are getting something out of it, send me an email, support@marketgeeks.com. Start a conversation on YouTube with me. Let me know how you guys are liking this video. I want to hear from you. Support@marketgeeks.com or roger@wealthpress.com. I don't discriminate. The email will get to me one way or the other. Talk soon.